Let's bring in Bryce Doty, Senior Portfolio Manager at SILJ Investment Associates, which has $16 billion in assets under management. Bryce joining us today from beautiful Minneapolis. Bryce, we are going to talk a lot about inflation, I suppose, over the next few days here as we wait to get a little bit more insight from the Fed here. When you look at expectations right now in the market, do you think that they're sort of lined up with what the Fed has been communicating?
No, I think there's a disconnect. There's some overlap, but clearly when you look at the break-even rate 10 years out on tips, let's say, it's north of 2.5%. The Fed says that this inflation surge is temporary. Well, 10 years isn't exactly temporary, but the 2.5% is certainly less than the 5% year-over-year inflation rate. So certainly the market acknowledged that there's going to be some reduction in inflation after this initial surge. But I don't believe people think that it's going to go back down to 1 or anything that the Fed seems to be implying. So that's where I think there's an opportunity and a disconnect, frankly, between the Fed and the market.
So talk us through the opportunities, Bryce.
Well, I think I love that tips have an accretion right now that's been running north of 5% for 4 months. The current month and next month, it's going to be running at a 10% annualized rate. Pretty good for bonds, and then pretty good for anything. And then I've been a big fan of taking advantage of this spike in shipping costs. And I know that the ETF I've mentioned before, BDRY, is up big, but it's going to keep going up. I mean, more and more economies are opening up. There's 2.2 to 2.4 billion doses have been given out of a population of 7.5 billion. So there's going to be a bigger and a growing constraint on these different shipping costs. And then let's look at core CPI. It uses rents to determine the change in the price of your house value. So the change in home value has gone up 13%. Rents have only gone up 2 or 3. Well, there's be a catch-up coming on those rents, and that's going to be pushing core CPI up. The Fed tomorrow and the next day are going to be arguing over this. What do you do about it? And they can't really do much about it. But if they say anything that makes it sound like, okay, they have a plan, I would bet against that. I would buy the dip. If markets pull back thinking the inflation trade is over because the Fed is caught on, there's not a lot they can do. I would buy on the dip on any inflation trade that anyone has in place or is thinking about.
Speaking of inflation, Bryce, is it fundamentals or technicals that are keeping a 10-year to 150? Does that make sense to you?
Not at all. I mean, that is the most befuddling thing. You got year-over-year inflation running well above 1.5. No expectation that they'll get back to 1.5. And here the 10-year Treasury is at 1.5. So you have to start to struggle to think, what could it be? Could it be the Fed continuing to print $120 billion of money and buying treasuries and mortgages with it? It's got to have something to do with that. There could be other things, though, because they were doing that as well when rates shot up early in the year. So we're starting to look at some alternative things like Tether. Okay, that's a cryptocurrency tied to the U.S. dollar, and they've been plowing billions of dollars into cash. And that's suppressing cash yields. It actually has the Fed's reverse repo facility at an all-time high. While it's paying 0, it's getting maximum demand. So there's something else at play that's suppressing all these yields so abnormally. You shouldn't be able to make so much money on a tip and only get 1.5% on a 10-year treasury.
That's fascinating, Bryce. I mean, we've heard from a lot of fixed income managers who, of course, are looking for, I guess, quote unquote, alternative investments, given some of the distortions by the Fed, a lot of distortions by the Fed here. Do you not worry at all about the potential, and I know this is a big what if, but the potential that the Fed could actually at some point normalize policy?
Without a doubt. So the canary in the coal mine right now is how is the market going to be absorb all the corporates that the Fed is selling? They're selling over $13 billion worth of corporates that they bought last year. Can the market just quickly absorb that? Because that's going to be an indicator of how we can handle, we as the bond market, can handle when they taper, when they stop buying $120 billion a month. Because it's going to be tough to see how that goes and how they even talk about it. Because tomorrow, they're all going to be scratching their own heads and then come out with an announcement on Wednesday about how they're going to handle it. And that's when I think you could see some volatility, because the bond market isn't sure. They're not sure how it's going to go down. But they have to understand that continuing to print all this money is not helping. It's not helping the inflation picture. It's not helping anything. So they need to do something, need to do it sooner rather than later. And it's going to be interesting to see how it plays out.
Bryce, briefly here then, if we're talking about diversified assets, I asked it of Kevin Nicholson over at Riverfront Investment. He's like the co-CIO of fixed income, but he's looking at equities, but he's not going as far as the high yield debt that's linked to crypto. But is this these sorts of areas that you're looking at, or your investors or indeed clients are wanting you to look at?
Well, we need to look at the crypto all the time. It's taking money out of the financial system. Now, the Fed is injecting money into it, but it's a precarious situation to see how imbalanced it's going to get. When crypto is small and didn't have a lot of assets in it, it's not a big deal, but it's really growing. And that what happens from the money that leaves to go buy the cryptocurrency? If the Fed starts tapering and raising rates and selling its corporate bonds and things like that all at the same time, you're going to have some trouble coming this way. So we have we also have a really safe fund that I like to mention. It's VALT, VALT, that I think is a good place to just have a little reservoir of cash, just in case these things don't go as planned, because there's no way to really know the explosive growth on these tracking cryptocurrencies that track the U.S. dollar.
Yeah, Bryce.
Remember, every dollar goes into that goes back into some sort of cash environment, so it can suck money from around the world and bring it here.
Diversification. Bryce Doty, thank you, Senior Portfolio Manager over at Investment Associates. Meanwhile, we are still...